Michael, thanks so much for joining us today. I mean, just looking at your numbers, you have had strong growth really across some of your key earnings. Identity, strong growth there, 25% growth, in fact, in those earnings. But just take us through the numbers.
Yeah, our figures we're quite happy with them. Our sales were up by 12%, operating profit up by 12%, and our headline earnings up by 16%, as you just said. Bearing in mind, though, that we did have the advantage of the extra 53rd week in the year, which made quite a big difference to us. We did reasonably well across all brands, but again, as you said a few minutes ago, our identity brand was the star performer. That's aimed at the lower end, cheaper, better priced, but still very fashionable young end of the market, 16 to 25-year-old. And credit has been a bit tougher, but generally things have been pretty good.
I mean, you talk about things have been pretty good right now. There's a lot of concern in the market as to how Truworths is going to respond to the likes of Zara International setting up shop here, Topshop setting up shop here. A lot of international brands, of course, seeing South Africa and Africa as a growth market. Are you responding to increased competition?
Yes, look, South Africa has always been a competitive environment. There's a lot of very competent chain stores that are local that we compete against that are, in a sense, of more concern to us. Yes, there is increasing amount of retailers from abroad here, but they still have very limited store footage. They have got to get used to the local market here, local conditions. So we tend to focus on what we know to do best, which is to buy the right merchandise, best quality, cater for our South African clients in a unique way. And we feel comfortable that that will protect us against any external competition from international retailers.
Talk to us about the indebtedness or the perceived indebtedness of South African consumers right now and what you're seeing from your client base, because your model, of course, very much based on credit. Is there a limit to how much more credit they can start taking on, and how are you managing a risk that is perceived out there in the market?
No, that's true. I mean, there's definitely South Africa is, and always has been, that's the point I must stress, a very credit-driven society. Most 73% of our sales is on credit, and the consumer definitely is under pressure. There's been quite a dramatic increase in credit granted to the South African consumers over the last 12 months. Quite a lot of it, by the way, by the banking sector, as I understand it. But the point is that our method of managing the credit is using extraordinarily sophisticated technology by being conservative and making very high accounting provisions against any perceived bad debt risk of the future. So we manage it by managing the risk. And remember, we've done this over a long period of time. And credit and the cycle of credit is not an event. It's a sort of a cycle that happens over time. So if you manage it properly and carefully and don't gamble, then you can manage your way through a difficult credit environment, which this certainly is.
Yeah. Another issue, Michael, is what you plan to do with the cash on the balance sheet. Cash and cash equivalents increasing for the period, 1.6 billion rand. Do you intend to put this to work? What is the plan for that?
You know, we've told our shareholders that we're trying to not go much above that number. That is hopefully for an acquisition in the future, or more than one. What we also have done is been buying back shares over the years. We bought back over 2 billion rands worth of shares. We also have increased our dividend each and every year over the last 5 years by quite a material amount more and greater than our growth in profits. So, for example, this year, as you said, our headline earnings are up by 16%, our dividends are up by 24%. That way we're trying to ensure that the cash balance does not grow much greater than it currently is.
Michael, of course, I can't let you go without asking you where you intend to make that acquisition or those acquisitions.
No, we're looking all the time. We bought Uzi about 5 years ago, which has been an amazing brand. 6 years ago, we bought YDE a few years earlier than that. We've looked at a number of businesses over the years, and we continue to do so.
So nothing on the cards right now?
For obvious reasons, I can't give you more information than I just have.
Thank you so much, Michael. Of course, pressing you for an answer there. Michael Mark, CEO of Truworths.